Progress.
Good afternoon. Welcome to What's Happening in the Stock Market for June 6th, 2022. Sorry for starting a little bit late. I wanted to grab one final chart to throw up on my presentation. Wave to those who have registered with Zoom. Nice to see you today. From the other ways that we are broadcasting, I do not believe you see my video. And all I can say is, lucky you, although I did shave yesterday. Okay, I have a very big presentation today, so I'm going to get started. Just wanted to wait till we cross the magic 100 number, which we just did. Going to turn off my video, and we're going to begin. So, top stories for today's webinar. Retail investors give it all back. Tesla is leaking emails. Some tips for creating your watch list, but first, JP Morgan, probably the premier investment bank. CEO Jamie Dimon says a storm clouds are now a hurricane down the road. He's talking about the economy. So he has actually become a weather forecaster. Well, at least he's an economy forecaster. So what he said was the challenges to the U.S. economy is a hurricane down the road. But the Cleveland Fed Bank president said risks of recession have gone up as well. So it's not only Jamie Dimon saying it, but he got a lot of the press because he used these fantastic words like hurricane and the storm clouds and all that stuff. But other people have opinions too on what's going on in the economy. For example, John Waldron, who is president and chief operating officer of Goldman Sachs, he said the current economic turmoil was one of the most challenging he's ever faced. But remember, in April, Goldman said recession is not inevitable. So only a few weeks later, seems to be changing their mind. Citigroup CEO Jane Fraser said Europe is more likely to go into recession than the United States. And all the conversations she's been having, she's doing a little bit of a tour around, I guess, the world. But all the conversations have been focused on the three R's. What are the three R's? Rates, Russia, and recession. So that's what all the conversations have been about. The fourth largest economy by nominal GDP is Germany. And here is a headline from Bloomberg that Germany risks becoming the sick man of Europe as woes mount. Only Estonia in all of Europe is expected to post slower growth in 2022, and economists are starting to predict a contraction this quarter. So as they say in Europe, as Germany goes, so does Europe go. Of course, that's not necessarily the case, right? There are countries that can thrive during that. But yeah, I mean, look, if Germany is not doing so well, the risk of contagion in Europe, the risk of contagion worldwide is definitely something to pay attention to. Now, the big difference, of course, between Germany and the U.S. is Germany is heavily reliant on Russian oil, right? Russian energy. And they've already announced that they're going to impose sanctions and phase out the use of Russian energy by the end of 2022. But then there's also reports that they're usurping it, getting directly from Russia and buying discounted, I don't know, whatever it is. But right now, this is the talk here, and it's definitely something to pay attention to. And while it doesn't necessarily affect the United States market head on, it's something. The worldwide economy is definitely something to pay attention to, right? Because exports are a big deal in U.S. companies. It's something just to pay attention to right now. Now, other CEOs who have made comments is Elon Musk chimed in that he had a super bad feeling about the economy. More on that later with Mr. Musk, but he said a super bad feeling he had. But Bank of America CEO Brian Moynihan, I watched a nice long interview with him, and he downplayed Jamie Dimon's comments. And at the Davos, whatever, I think it's Davos conference, not comments, a couple of weeks ago, he said that Americans have not spent all their stimulus money yet, and consumers are still spending money. Now, one of the big things when people talk about recessions is the spending drying up, right? And 2/3 of the economy allegedly is based on consumer spending. So he's saying that people have not spent all their stimulus money yet. I don't know. I saw savings rates back down to 13-year lows. The last chart I took, last chart I looked at. Sorry. So I don't know where this is coming from. Obviously, he would have more information on this since he can look into the accounts of consumers, right? But Mike Scordos, U.S. macro strategist at Truist Advisory Services, I think they manage about $65 billion. He says there will be a rocky path, but recession fears are overblown. He's pointing to wages and income, which are inflationary, right? Rising wages and therefore rising income, although they're not always the same, right? You can get a raise in your hourly wage, but they may cut your hours, so your income may not raise. But anyway, a rise in wages and income, they are inflationary signs, but they're also a sign that it's going to continue the trend of strong consumer spending. I read an interesting article. One of the things that happens in a recession or in a stock market crash, or when people are feeling down, they're not going to stop spending. And what they'll do is they'll cut back on the big ticket items, and they'll still buy the smaller ticket luxury items. Things, something called the lipstick effect, which is that, oh, okay, well, things are hurting, so I can't buy a brand new car, but I'll go and buy expensive lipstick at Ulta. And how do I know that you buy an expensive lipstick at Ulta? Don't ask me. But anyway, so that's why it's called the lipstick effect. And of course, it's not just about cosmetics, right? It's about all things. So if people can't afford big ticket items, they're still spending money on things that make them feel, that they're buying luxury, but not have the big expenditures. Now, Deutsche Bank's Binky Chada says a recession fears are overblown and sees a 15% rally by the end of 2022 in the stock market. But in April, Deutsche Bank was one of the first banks to call for a major recession. So again, getting mixed signals here. Only a couple of weeks later now, everything's okay? I don't know. So enough. Why am I showing pictures of Michael Jackson? Well, here's the deal. What I just showed you is a bunch of opinions. Now, granted, these are very smart people, okay? But opinions are like noses. Everybody's got one. Michael Jackson had 6 different ones. Apparently, Deutsche Bank and Goldman, they have all these different opinions that change week to week. So I'm not saying ignore all these opinions, but take them for what they are, right? Look, whether we're in a recession, whether inflation continues or it dies down, whether we go into a depression, right? If you are investing, there are things that you can do no matter what the economic climate is. Okay? You look for good companies, however you judge a good company, whether it's cash flow or whether it's high quant ratings or whether it's technical analysis or whether it's solid fundamentals. All right? You can still do things in order to put your money to work if you choose to do so. Guess what? Staying out of the market is also an option. If you decide, hey, let this pass, let the storm winds go. Maybe, you know what? I don't want to risk so much capital, so I'm going to keep it on the sideline, and then I'm going to see what happens. That's a choice too, right? But so again, I'm not saying ignore all these people and what they're talking about in the recession front and inflation, but just keep it in mind that you still need to have a plan. And if you're just waiting to see if the recession actually happens, look, the market, who knows where the market will be when they finally decide if a recession has occurred. Now, Daniel's going to post the link to this. If you want the full transcript of Jamie Dimon's talk at the Bernstein 30th Annual Strategic Decisions Conference, we have it on Seeking Alpha. And I love being able to go and read these transcripts. There's a lot of transcripts available on Seeking Alpha, earnings call transcripts and stuff like this. So go read and see what he has to say. He's extremely smart. I'm not knocking Jamie Dimon for using weather, for producing a weather report, but I'm just saying, it's great to read. It's great to stay on top. Just always remember that this is background. Right? It's not something like, oh, we're in a recession, I have to choose this one. You have to have a plan no matter what. Now, moving on to inflation talk, since we're on recession, it's a quick move to inflation. There was a report, this is from CNBC, nearly half of families, I can't read the headline, but they say that, sorry about that. Let me go back. Nearly half of families with kids, right, can no longer afford enough food 5 months after the child tax credit ended. Now, this is based on a survey of 500 parents. I don't know if that's statistically significant or not, although I should because I have a degree in sociology and all we did was take surveys. But I digress. I digress about the college education that I had. Anyway, so how are families cutting their food budgets? Well, they're changing the types of food they bought. They're changing the brands of food they bought. They're using food banks. And parents are skipped meals so children could eat. And 9% reported that the entire family skipped meals. I mean, in my opinion, I don't get political on these calls, and I don't know if this is technically political, but it's just a very strong opinion. This is disgraceful. Nobody should ever go hungry, right? Kids should not go hungry. We should not go hungry. We are, one of the richest, if not the richest country in the world. Okay. So again, I'm not going to turn this into a political thing here because this is not the forum for this, but this is horrible. This breaks my heart. And this is why I donate to food banks. But that's me. You can do whatever you want. I'm not telling you to do that or not do that. But this is, this is how inflation is really starting to weigh on people, right? It's really, cracking people. Now, this appears to be the low income spectrum, but there was another report put out that a lot of high earners are reported living paycheck to paycheck. Sorry. And I don't judge any of these people either. I've done it. I've done it for years. Okay. When I was considered, whether I was or not, regardless, that I've lived paycheck to paycheck too. But look at these numbers. 63% of millennials earning $100,000 to $150,000 a year are living paycheck to paycheck. Okay. 55% earning $250,000 or more are living paycheck to paycheck. Okay. So now again, right, the more things that change, the more things stay the same. If you look at these numbers several years ago, all right, you'll see similar things. People are living paycheck to paycheck. People are not saving, right? So that's why it throws me a little that Moynihan from Bank of America is saying, hey, people haven't spent all their money yet. I don't know, right? So again, could this be a problem? Sure, it could be. It's definitely a problem for these people. What happens if layoffs, which we're already seeing in the tech sector, right? Freezes and layoffs are happening. What happens then if they don't have any cushion to fall back on? Now, more news. This is regarding the stock market. I'm not going to be a total doom and gloomer today. I'm just reporting what I've read this week. I guess I gravitate towards the doom and gloom stuff. But a report from Goldman said retail investors have sold most of their U.S. stock purchases from the last 2 years. Over the last 7 weeks, this is as of June 1st, $26 billion has left U.S. equity ETFs and mutual funds, often traded by retail investors, right? Now, this is a fancy chart. If you want to take a look, you can see that the money has just left the market from retail investors, okay? Now, what does that tell you, right? We asked Hyman Roth, what does that tell you? Well, as a contrarian indicator, it says the quote-unquote dumb money is leaving. Maybe that tells us that we can get a bounce here and a bigger bounce than we've already started. That's something to look at, right? The quote-unquote dumb money, and I continue to use that term because that's what's used on the street. I don't like calling myself the dumb money because I'm a retail investor too, right? But the retail investor, a lot of them make the decisions at the wrong time. They're buying at the highs, they're selling at the lows, okay? So this is telling us with the sweep out of all this money that maybe the bounce goes further than expected. And then when the retail decides, oh boy, I got out the wrong time, let me get back in, maybe that's a short-term top. Something just to pay attention to. We're a long way down the road for that. But in my opinion, it's definitely something to make a note of. On Friday, Tesla fell 10% as staffing and safety issues increase anxiety. So on Wednesday, in a leaked, and I use the quotes around leaked, email to executives, Elon Musk made it known remote work is unacceptable. You got to come to the office. And if our factory workers are in the office, then you have to be in the office too. And you should be in the office. And if you're not going to plan on being here at least 40 hours a week, I take that as your resignation. Okay. On Thursday and Friday, emails were leaked again saying 10% of the staff is going to be cut, but hourly workers are going to increase. Global hiring is being frozen as he has a super bad feeling about the economy, which I already mentioned. The stock got hit Friday, the worst performer in the S&P 500. This is from Friday, 620.57, followed by 539.49 on numbers to watch in the on the short term. Okay, this was taken Friday after the close. Today, Tesla's up a little bit, couple percentage here, getting a little bit of a bounce, but this is support to watch if Tesla continues to sell off. Then on Saturday, Mr. Musk posted on Twitter, I believe, that headcount will increase, but salaried employees will remain flat. So they're not cutting 10% of the workforce after all, but saying that headcount will increase. It's just not going to be from the salaried employees. Now, at least he kept the emails to leaked emails instead of reporting all this on Twitter, although the last little update was on Twitter, right? But at least the initial leaked emails. Now, why did I put leaked in quotes? I don't believe they were leaked. I believe they were purposely released. But again, I have no evidence of that. That's just the way I think. And, as you've seen so far in this presentation, I'm pretty pessimistic. All right, so here's where we stand. Most of it is a repeat of last week. Last week was a pause, and we continue to churn today, but we have started a bounce, and we're nowhere near out of the woods. Remember, we want to be 20% up off of the lows. 456.65 is 20% on the SPY. 336.25 is 20% on the Qs. Okay, now again, this doesn't mean, okay, as soon as we get to these numbers, we're all clear, we're going back to highs. No, it's a start. It's a start. We want to start with 20% up. There are possible areas of trouble just above here on the SPY and the Qs before we get to those numbers. And these do not necessarily mean we just turn back down, but we have to watch to see how we react there. Since last week was basically sideways, most of it is a repeat from last week, right? You can see here we're sideways. We're actually a different looking candle right now because we sold off a little bit here, still green. But we have that 50-day moving average, that blue line coming down at 423.21. Then we have 429.66 as levels to watch. On the NASDAQ 100, 317.45 is the March 2022 lows. That's going to be key for the NASDAQ to get above. And we want to stay above those March 2021 lows, right? Which we dipped below, but we came back up. But right now, there's nothing here except we started a bounce. We're pausing. As you'll see soon, I'm going to give you my opinion on what I think that means. Now, let's talk about building up your watch list. One of the things I've been talking about the last few weeks is getting ready here. Okay, what if this is the low? What if we're going to rally? What if we're looking for companies to get back in? Here's a list from Bloomberg, a chart from Bloomberg, that the number of money-losing companies in the Russell 3000 has increased. Okay, what does this mean? These are companies in the Russell 3000, which is a more broader index, that has a negative operating profit and negative cash flow. Okay, these are called zombie companies. All right, where the only way they exist is if they borrow more money to continue. Now, with rates rising, that's a big problem. So it's a good idea when you're building out your lists to go through and look for these stocks. And maybe these stocks are not the best ones that you want to own. I'm not saying you don't want to own them. It's completely your choice, right? But if you look at the technical side of things, right? If you just look at charts, and even if you're not an expert chart reader, even if you're just brand new, just look at some of the companies and how they're reacting to this bounce. Stocks like Peloton and Teladoc. And I know I beat up on those stocks a lot because I just still cannot believe that they're still hanging around, right? Peloton now today is 12.39. It's down, right? But what has it done since the market bottomed out? Nothing. It's basically back where it was. Stock like Teladoc or Coinbase or Robinhood, right? Yeah, these are stocks that are being picked up. You hear, oh, Kathy Wood's buying this. And, okay, great. But where are these stocks going right now? Now, this doesn't mean these stocks can't get a bounce, right? It doesn't mean they can't get taken out by somebody. But, one of the things you want to do is when you're putting your list together is put together something that, in my opinion, actually has a chance of surviving. So let's do a pop quiz here. Now, excuse all the black marks, but I had to fade out what the actual symbol is. Otherwise I would have given it away. Does anybody know what stock this is? Just take a guess. Please type your answer in the chat. Anybody know what stock this is? And just so we understand it, had a huge rally on the upside, and then boom, a huge drop back down. Anybody know what stock this is? Netflix, Facebook, Zoom. Okay, anybody else? Anybody else want it? Walmart, Zoom, another Zoom, Amazon. Okay, here we go. This stock is this little known stock. I don't know if you've ever heard of it. And I especially don't know if you or anyone you know has ever used the product. Okay. Can you smell the sarcasm coming out of my words? Okay. Obviously, it's Coca-Cola, right? Now, this is back in the 70s. This is a split adjusted chart, right? So this is after splits, right? But Coca-Cola had this huge move up in the 70s. Big, oh my goodness, it's going crazy. The price earnings went nuts. And then boom, it collapsed and went back in 74 under the price it was in 1970, 1969, whatever it was, even the IPO, I believe. Yeah, below the IPO price when it first started trading. So this is Coca-Cola. Now, it returned 13,589% if all you were doing was using the price, okay? 46 cents, that's split adjusted, to 62.97, which is where it was trading as of this weekend when I took this. 48 years. But if you reinvested the dividends since 1975, and I'm relying on a website I use to find this, so it may be off by a little bit, but if you reinvested the dividends, you made 68,467% since 1975. So that's about what, 27 years, a little bit before. I'm not talking about picking the very low, right? The very low was back in 74. So this was buying it, right around the start of 75. Okay. So what's my point here? My point here is not every single stock that has gone stratospheric, I don't even know if that's a real word, and then crash is going to go away. A lot of these stocks are going to be around, okay? But it's your job as an investor. And why is it your job? Because this is your legacy. This is your money, right? It's your job to do the work and to dig in as deep as you can. If you don't want to use charts, fine. There's so many other things to do. And there's so many resources on Seeking Alpha, right? So one of the ways I'm going to show you right now, a quick tip, is I like going to top stocks on Seeking Alpha, right? This is Seeking Alpha Pro, but you get it on premium as well, okay? So I like looking at top rated stocks. I believe as of this morning, there were 77 stocks. I'm not going to show the list because that's not fair to those who subscribe, but I am going to show one stock. I'm going to show Golden Ocean, GOGO. I like this stock. I'm not saying I like it, that it's a buy or anything like that. That's not what I mean. I just like the fact that it's almost Google, right? They missed one O. Otherwise, it's the same symbol as alphabet. I think that's funny. So I'm sorry. I know I have a real weird sense of humor. Okay, has nothing to do with why you should buy the stock, okay, or not buy the stock, right? But this was ranked number 14. Today, it's actually ranked number 13. I took this, like I said, over the weekend, and you could see really high ratings across the board. There's a fantastic article written by Stephen Kress, who is a head of quantitative strategies here at Seeking Alpha. I think he has 3 decades worth of experience in the market and formulating quantitative stuff. So he knows his stuff. 3 best shipping stocks to buy amid the global shipping crisis. This is one of many articles that you can read. And there's also a couple of other stocks in there that I crossed off because, again, like I said, this is for members, right? But Golden Ocean Group Limited, or you can read all about it. You can put it through the quant, and then you could take a look at the chart. Now, again, this stock looks like it's already broken out, so it may be too late for this one. You may need another pause and pull back or consolidation, whatever it is. Okay, I don't like chasing. It doesn't mean it's not going to go higher. This stock has had a nice run since the beginning of the year. Okay, it's more than doubled, and it looks very strong. It's in the energy. It's in the the shipping space, right? Which has been on fire. Go look at Jay Mintzmeyer. Go look at his stuff. He's absolutely on fire. He's destroying, in a good way, the returns of the S&P 500. He's up huge because shipping is so hot right now. So this is what a site like Seeking Alpha can give you, right? It's ABC. You go to top stocks, you get the list, and you take some time and you go through the list and you look at these stocks. And then you read the articles and you read what people are saying. And then if you're a chart person, you lay out the chart levels. You lay out support and resistance. Okay? That, in my opinion, is one of the best ways to make a list. If you don't want to sign up for Seeking Alpha Premium, if you don't want to take a 2-week free trial, that's fine. This isn't meant to be a commercial. Okay? But the point is, do your research. Okay? Look into what stocks that you want to own. But in my opinion, grab a 2-week free trial and see for yourself. All right. Now, let's talk about crude oil quick. Oil broke from its little perch mentioned last week. ADX is still low, but it's turning up now. Resistance at 120, which it tried to get over but failed. But then technically, a test of highs at the least would be a level to watch, 165 above that. So ADX is now 1345, right? It was down in the 9s, you remember. And you could see that crude oil is rising here. Okay, so I'm watching that 125.83 number. That's the last highs, but still got to get over 120. Let's look at last week. Last week we went sideways, but we were red. So we broke our amazing 1-week winning streak. S&P down 1.2%, Dow down nearly 1%, NASDAQ down nearly 1%, and the Russell 2000, the small caps, they showed the best relative strength, only down 0.25%. Consumer cyclical had a good week, but they're still down pretty big for the year. Communication services also had a good week, but they were down for the year. Technology, good week, down for the year. So 3 of the worst performing year to date were the best groups last week. Healthcare was the bottom of the barrel. They're down about 12%. Consumer defensive down 6.6%. Utilities were off fractionally. They're up 3% for the year. Now, is this the pause that refreshes here in the stock market? Let's take a look at what's going on. Tuesday, we were up. Wednesday, we were down. Then we were up. Thursday, we were down early. Then we rallied. Friday, we went sideways. Today, we gapped up. It looked like we wanted to head for Thursday's highs. But instead, we rolled over. Now, we're still green as I am. Let me make sure I'm not talking out my butt. Okay, yeah, we're still green, but we're not up that much right now. We're only up 0.16%, 0.17, it's whatever. It's fluctuating. So again, we're in churn mode. That's okay, though. We'll talk about that in a minute. Let's look at the American Association of Individual Investors. Remember, a group of about 200,000 people. They're sent a one question survey. Where do they see the market 6 months from now? Okay, and it's printed on Wednesdays for some reason. Okay, the bulls had a really big jump, right, up from 20% to 32%. That's 60% jump. right? And but you could see neutral swelled a little bit, couple percentage points, but a nice drop in bears. So what are people saying? Oh, they're getting more bullish here. Now, again, if you're a contrarian and you like to fade this is saying, uh-oh, we may want to dip back. I don't know if this is a big enough reading to call this a contrarian yet. The CNN Fear Greed Index as of 11 o'clock, we've moved from extreme fear to just fearful. So getting better, people are gaining a little bit more confidence there. The VIX is falling. We're at multi-week lows still at 25, which is slightly elevated. But to me, until we get over 30, and that's just an arbitrary number. Again, I'm not really looking for anything here as it is in the 20s. I'd like to see what it does at the 200-day moving average. Here's an article. What is the VIX? Daniel posted this link last week. Daniel, if you have that link handy, you could post it, but I don't think I gave you a heads up. I just left it in here. But this is more talking about what the VIX measures. So, of course, if you'd like to read that article. Now, let's talk about hypergrowth stocks. I use ARKK. That's Kathy Wood's the innovative ETF, innovations ETF, and it's sideways like the overall market. Overall, it's holding steady for now. Remember, it's in a longer term downtrend, but for the most part, it's just going sideways here. Okay, not really doing much. News this morning, DD Global was up pretty nicely that China says they're going to end their cybersecurity probe. Whether that's true or not remains to be seen. I saw something on by Mr. Jim Cramer. He went nuts on this, saying, "Do you really actually believe this stuff and all that?" Which, you know, look, I don't disagree with him. And by the way, I'm not a Cramer slammer. I think he's very, very smart. I know a lot of people love to pick on him and, oh, the picks he gives on his show, they don't really do that good. Okay, well, you sit there and give opinions on 100 stocks a day, right? I mean, in my opinion on him, he's forgotten more than most people ever know about the stock market. I've read his books. I loved Confessions of a Street Addict. I thought it was a great book. But anyway, regardless, let's continue. You could see that DD was up pretty nice when I took this at 53.24%, although it was selling off. But right above at 3.68, that's a strong gap that needs to be respected. So until we're above that, yeah, I'm not really getting excited about this, right? This is more of a reaction play because of the news right now. Actually, I'm looking, it's only up 36%. It's trading at 252 now. So it's already getting a little bit of a selling here. But to me, when it gets above 368 and sticks, then I'll become more interested. Speaking of China and COVID, due to new cases, multiple neighborhoods in Shanghai were put back under lockdown just one day after those lockdowns were lifted last week. Okay, now not entire Shanghai is locked down, only a few neighborhoods. All right, but I have a question. What happens to oil? Right, we've seen oil move higher, but what happens when China fully opens back up and demand starts ramping up? What happens to prices then? Just something to pay attention to. Amazon shut down its Kindle bookstore in China. That was a week after Airbnb announced it would shut down listings in China. Doesn't mean they're not in China anymore. If you're leaving China and looking for a place to stay, you can still use Airbnb, but they're not doing listings in China anymore. Now, on another news, Starbucks has reopened 600 of its 940 stores in the city of Shanghai as lockdowns were eased. There's a total of 5,600 stores in all of China. Of course, my favorite Starbucks joke is they're running out of room to build Starbucks, so the new place that they're building a Starbucks is inside the bathroom of an existing Starbucks, right? Anyway, okay, very good. So 600 out of 900, I don't know if that's a good joke, but it's a joke. 600 of 940 stores in Shanghai are already back open. So something to pay attention to now, both for Starbucks and both for the economy overall. Supposedly, there are big lines already after the reopenings there. Okay, let's look at some stocks. Let's look at some other markets. Natural gas on the rise here. Okay, it took a little bit of a breather, but now it looks like it's headed back for the highs. It's actually trading higher than when I snagged this. So we want to watch those two little highs up top at $9 and just about 44 cents. We want to pay attention to that. If that breaks, it could be a quick move to $10. Talk about inflationary, right? Here's gold. So gold is just hanging on here. I put the ADX up on the gold chart to show that it's trending down and it's under 20. So it's saying that it may be due for a consolidation here. Here's silver, also continuing to consolidate here. 2150 is a good number to watch. Here's the euro. So everyone got super bearish, then it poked out the other side. And now look how dollar spot 064 held for the time being. But the euro looks like it's doing what the markets are doing, which is basically just going sideways here. And 10 years look like they're headed down to 116 and 28.5. A lot of people are calling for the lows in bonds. Like I said a few weeks ago, let us get above 120 and 18.5, and then we'll talk about a possible short-term bottom, not the ultimate bottom here, right? But again, I mean, it doesn't look like the Fed has announced that they're backing off on raising rates or anything like that. So bonds, in my opinion, a lot of people are calling for the lows here, and perhaps a low is possible. Maybe they double bottom here. I don't know, but I think right now, technically, it looks like we want to retest those lows. Don't know if it'll happen, of course. Crypto's on the move. So Bitcoin and Ethereum were moving sideways, but they got a little bump, which carried over from the weekend. Still in a pretty tight range. Nothing to get super excited about here, unless you're a short-term trader or scalper. And then, of course, I say it every week, granular analysis on the crypto markets can be found on Crypto Waves. Go to the Seeking Alpha Marketplace, look up Crypto Waves, take a trial. Well worth it, in my opinion, to see what they're about. Okay, they give granular analysis on the big cryptos, the smaller cryptos, and even some crypto stocks. So here's Ethereum. Yeah, it's on a little bit of a bounce, but get above 2159. And here's Bitcoin on a bigger bounce, up about, let's see what it is right now. Give me 1 second. Bitcoin's down a little bit from here. It's still up 5.6%. It was up 6.2% basically here. But I want to see it get above the 50-day moving average before I'm excited about a longer-term prospect. And you still have the 200-day, which is starting to come down as well. News, Elon Musk went at it with one of the Dogecoin creators. He said that the Dogecoin creator said that Musk struggled with coding or something, and Elon Musk snapped back and said, my kids wrote better code when they were 12. I don't know. I thought he was big pro on Dogecoin, but apparently this one co-creator he's not happy with. Okay. And in news, right, there's a picture of the Wild Wild West. It appears the NFT days, NFT markets days of living in the Wild West are numbered because a former OpenSea employee was charged in the first ever NFT insider trading case, right? Oh, it has nothing to do. You can't regulate crypto. You can't regulate NFTs. This is a totally separate market. Oh, this is freedom from the constraints of the bank. Get out of here. Apparently not. Okay, former product manager, and I was being sarcastic in all those rants, right? Of course they can. The government can do what they want. Okay, former product manager, 31 years old, used information on what NFTs were going to be featured on the OpenSea homepage for his financial gain, buying them before they were featured. Charges filed by the Southern District of New York, which is known for extremely aggressive pursuit of crimes, okay? If you're a Billions fan, right, this is where Chuck started, now whoever the new head of the Southern District, right? They're known as the Sovereign District, okay? So this is, this is real. And by the way, any district from the Department of Justice going after somebody is serious. Okay, so I'm not saying, oh, it's a Southern District, so this one, no, it's serious no matter what. But in my opinion, this may be the start of a good old-fashioned toilet flush for the scum of the industry. Okay, I'm not knocking NFTs. Okay, I don't appreciate getting gaslit by all the people. Oh, if you think NFTs are just a picture of a JPEG, you have no idea you are missing the bigger picture. You have no idea. Okay, great. What is the bigger picture? What is the bigger picture? You tell me, right? All you're doing is gaslighting people by saying things like that. In my opinion, there are a lot of people out there. I saw some promotions for We're going to show you how to buy NFTs that you absolutely can't lose. How to make, this is the next gold rush. How you can make. Well, I mean, give me a break. Are you kidding me with this? It's just. I'm not saying NFTs overall are a scam. My opinions are my opinions on that. Okay, but all these things are all part of this insider trading, front running, getting in and then selling it to the next person. Ponzi schemes. Okay, a lot of this, that's what it's about. Now, some people think the entire crypto market is a Ponzi scheme. That's fine. That's on them. Okay, but all this stuff is just taking advantage of people who are looking. And look, when the government was handing out money, and it was, oh, look at all the stimulus. People have a lot of money to spend here. They're looking to put it somewhere. Great. But now there's no more of that. Okay? You saw, right? People are having to skip meals for their entire family, or they're skipping meals so their kids could eat. Okay? So this is a different time now. This is hard. I'm glad they're doing this, and I hope they continue to pursue it and lock up all these people who are running these scams. Okay? Again, this is not a knock on NFTs overall. It's just the people that are taking advantage of the extremely gullible. Shame, I would say shame on them, but they have no shame left. Okay? All right, good. Key points of focus. Amazon starts trading split adjusted as of today. Let's see what it's doing right now. It is up 2.3%, but it looks like it's already reversing off of its highs. Apple is holding its Worldwide Developers Conference, known as WWDC. And the Barron's cover story, this was interesting. It highlighted a boom in weddings and how it may signal the bottom of the U.S. fertility rate after a 12-year decline. I don't know if you can really connect the two. The boom in weddings makes sense because everybody's cooped up. I know 4 people had to cancel their weddings due to the pandemic, etc. And by the way, 3 of them have decided not to get married anyway. So maybe it was, anyway, whatever. But they're highlighting a boom in weddings, and they're talking about how this is great, and we're going to, because I've been reading a lot about fertility and demographics and stuff like that. It's kind of boring stuff. I don't want to talk about it at the webinar like this, but it's real interesting. If you ever have some spare time to Google fertility rates around the world, and like China is down at the record lowest levels ever, and just interesting to see, right? And what's the end result of that, right? Of not having, not growing, right? The population. What does that lead to? All right. On a short term, pauses are good. This is a good thing. Why? It gives late to the party buyers a chance to get on board. And the non-believers, the people said, no, this isn't a real bounce. It's a chance for them to reassess and say, hey, maybe this is a chance that we're going to bounce, and maybe we can get on board here. But we are back to a Mizzou market, baby. Show me, right? Missouri is the show me state. I want the market to show me here. A pause is great, but let's see us continue higher. Not just going to say, oh, we're pausing after bounce. We have to go higher. There is no have to. It's the stock market. Okay? Something just to pay attention to. Short-term strategy. Time is on our side currently, right? The volatility has died down a bit unless you're trading intraday, right? But it's died down a little bit. It's time to make your list. I showed you a tip. Next week, I'll show you another tip, right? But I showed you a tip how to use Seeking Alpha. Go to Top Stocks. Start reading about these stocks on this list. Start mapping them out on charts if that's what you do. It's time is on our side here. Let's do it. Build it out and formulate your action plan, whatever that plan is. If your action plan is to stand aside, that's a plan too. Now, this is repeated from last week because all we did was go sideways. The first startup is 20% from the lows, which I showed you the levels earlier, but we'll still have to clear some major hurdles for an all clear to new high signal. There's been no major washout with huge spike in fear, but will it matter? And in the end, we can bounce much further than people expect, especially since retail traders, right, the dumb money, as they call it, are evacuating, right? They're getting out as here. Now, here is an article I think is a good idea for you to read. It's called The Complete History of Bear Markets. Daniel's going to post this in the chat. And this is about bear markets overall. Now, whether, we're not really down 20% in the S&P, so are we really in a bear market? No. Look, if it talks like a bear market, if it acts like a bear market, it's a bear market, right? So it's a good idea to read up about what happens, a nice history of the bear markets in the United States since 1928. It's a really good article, and I think, like I said, I've said this a lot, but I think the articles on Seeking Alpha are top notch, and we have great authors here. So this is a great article to read about bear markets and to really get you up to stuff on what could be headed for us in the next several months. I read something this weekend, right, where 2/3 of the move in the bear market happens in 1/3 of the time. So that's saying that the worst has not yet happened here. I'm not saying it's going to turn right now. We're going to crash right. That's not what I'm saying. Okay. But if we are if we have started a bounce, if that bounce is going to continue, what happens when that bounce ends? So economic reports, trade balance, consumer credit tomorrow, crude inventory Wednesday, initial and continuing unemployment claims on Thursday. But Friday, the big numbers, the CPI and the core CPI. Okay. Because everybody wants to know, is inflation decelerating? Okay. Great article. Read this one. Just came out, updated on June 3rd. The consumer price index, the CPI and inflation. Daniel is going to drop the link to this one as well. Thank you, Daniel. I know I got you working hard today, dropping all these links, but this is another fantastic article to read and to stay on top of what the CPI means. Okay. Wednesday earnings is 5. What is that? I think that's 5 below. Yes, 5 below. Otherwise, it's really nothing important for the week, but that varies, right? Maybe you own the stocks, or maybe you're interested in the stocks that are reporting this week. But to me, I mean, only reason I'm interested in 5 below is I want to see what discounted retail does. If they're saying, oh, we're surging, what's it telling us? It's telling us that people are spending money. So thanks for watching. I know I was a little glum today talking about recessions and the people not eating and not being able to feed their kids. I'm sorry, but it was news, and I don't know. I questioned even putting that slide in, but it just angered me, so I did anyway. Thanks for watching. You can send comments to Michael S at seekingalpha.com. Any questions, please drop them. Once again, thank you to Daniel Snyder for the incredible help today, dropping all these links, and of course, running all the things on the back end. Without him, this does not happen. All I am is just talking to an empty house. All right. Who has questions for me? And remember, I cannot give individual advice. So if you're asking me, should I buy this or should I buy that? I have no answers to that. My vocals are choppy. Sorry about that. Where can I see this presentation later? It'll be on YouTube when it's done. Sounds like the microphone has a bad connection. Sorry to hear that. That sucks. This webinar, okay. Oh man, I'm sorry that the things were terrible. Okay. Yeah, what is the fix article? I'm so awesome. Thank you, Rosie. That's nice. Look, compliments are always welcome. And if you're nice with the criticism, you can criticize me too. That's okay. I'm always looking to grow, but I appreciate it. If we ate near a bear market, why? Okay, why gold stocks aren't rising? Gold stocks are not right. There is no flight to safety here. The dollar is still pretty strong. It's been up pretty well. Let me pull up the chart of the dollar. In 1 second, folks. The dollar has been pretty strong. Right now, it tested the 50-day moving average, and it's holding. It's off the highs, but it's still in a pretty strong uptrend. But gold, yeah. I mean, there isn't a flight to safety here. We're not seeing that. And that tells us that maybe people aren't scared enough to run into gold. Roberta says, who cares? We all need to hear it. Okay, what do you envision any interest in blockchain technology? Yeah, I don't know, Walter. I'm sorry, that is above my pay grade, and I apologize. I'm not just blowing you off. I just don't have an answer. I mean, I did a whole big research project on blockchain technology, everything from voting to the military. So I think there's a lot of good things coming down the road with blockchain. I believe that blockchain is going to be a very big catalyst for years to come, and there's going to be some amazing companies. But I'm not, unfortunately, I'm not really up to date and on top of it as I should be. Okay. The traders will better assess the market on seeking alpha. Yes, there's a big education section. I'm a social worker, and it's nice to hear about poverty in this realm. What do you think about Chinese companies? Look, Vanessa, I think that there is opportunity everywhere. I'm just worried because of the regulations, right? Like, look, like Alibaba, even Charlie Munger capitulated on Alibaba, right? So, I mean, I just don't. I have a hard time with I think there's an asymmetric setup with there's a lot, I guess, with too much risk, in my opinion, with very little reward because of the regulations and because of the wild card with what the Chinese government decides to do. But again, I can't give advice on that, right? That's up to you. If you feel that these companies are good, if you feel there are opportunities there, it's your money. You can do whatever you want. Thanks, the mic worked great for me. Okay. That this is not only about making money, but remember to give to charity. I do not give enough to charity, so I don't want to be virtue signaling here. I should definitely be giving more, but after reading stuff like that, whenever I read articles like this, to be honest, it kind of fires me up a little bit to do more. Anyway, thank you very much for your time. You're welcome. Do you think crypto will be the 12th sector of the economy? It could be, Stephanie. I don't know if crypto or blockchain, right? I don't know, but yeah, maybe they're one and the same. In your opinion, the market's due for a comeback, or is the market going back on a decline? Are we in a market pump situation this week? Yeah, Antoine, I don't know about the market pump this week. Right now, we're just going sideways. My opinion is this pause is healthy. We started a bounce. Now we're taking some time for the naysayers to reassess and say, maybe it's real. Maybe we can bounce here, right? And for the people that are late to the party that were waiting for a low, maybe they get back in. But again, I need to be shown that, right? My opinion, please, folks, please. Again, my opinion means nothing. The market's opinion is what matters, okay? So I can look at the charts, I can look at the setups, we can look at the news, but let the market confirm that what we're thinking is correct. That's the most important part. Do you look at repo rate dynamics along with VIX? I do not, Elena. Maybe I should. Seeking Alpha's Education Hub. Thank you, Daniel. What factors will trigger a downturn in the oil industry? Yeah, Jeff, it's a great question, right? So what happens if the war in Ukraine ends and the sanctions are lifted on Russia? First of all, I don't know if either of those things are going to happen anytime soon. And I don't know if it's just a simple connect the dots. Oh, look, Russia pulled out of Ukraine, and now the sanctions lifted. I don't know about that, right? So, look, in my opinion, due to supply shortages and due to and not really a chance of replenishing them, I do believe that energy offers an opportunity here, right? But I am nowhere near the expert on this subject. There is an expert on Seeking Alpha. There's many experts, but the one that I like is Energy Investing Authority. So you can look him up, and he is really on the ball, and he has a great marketplace service. But he also publishes free articles. But look up Energy Investing Authority for more on that, right? But I mean, as far as an overabundance of supply may trigger a downturn, I don't know where that's coming from, though. Even before Russia went into Ukraine, there were supply issues. So I don't know. But again, I am not the expert on this. Thank you for your candidness, Michael. See you next week. You're welcome, Walter. China is cheap, is unloved. In short, retail hates it. So risk is much lower than a few months ago. Okay, Oscar, that's your opinion, and you are entitled to it, of course. Do you see a scenario where the Canadian dollar becomes equivalent to U.S. dollar again? And if so, for how long? As if Canadian oil is in higher demand, and I exchange Canadian for U.S., would rather. Okay, let me look up. let me throw a quick chart up here. I mean, right now it doesn't look like. I mean, it's still a pretty decent move away to be back on par with the dollar, right? It has had a good decline since topping out in 2020, but yeah, I mean, to be on par, it looks like what it would be back to the 2013 level. I don't know. Yeah, I don't. I don't know. Tom Nash and many others say that Europe likely won't touch Russian oil or ever or anytime soon. That could be the case, right? But then there's other talk about, are they still buying Russian oil? Are they, usurping direct imports from Russia and going through India or whatever it is? There's just a lot of talk. In the end, what speaks loudest is the money, right? One of the indicators that signals current, present, not past market direction. I mean, Stephanie, price is the ultimate, right? So indicators, if you're looking at ADX or any of the momentum indicators, they're always going to lag because they take past information. It doesn't mean they're not worthwhile to study and worthwhile to use, but if you're looking at, something that you're looking at what's going on now is price, right? You have to look at what is price doing. Are we bouncing? Are we pulling in? Or that's what is telling us the ultimate on what's going on now. Okay. How are the employment numbers looking? Employment numbers, I believe, are okay. They were reported last week. Anyone else have any questions? What's your opinion on ESG theme stocks, ETFs? Will they be in the doghouse for a while? Yeah, my opinion on them is probably a little too strong for this webinar. And the only reason is, I'm not giving advice, like I've said, but, if you heard my opinion, you could easily construe it as advice. In a nutshell, I'm not really a big fan of the ESG stuff. I think it's corporate virtue signaling. I believe that trying to eliminate, I don't. Yeah, that's really it. I'm not really a big fan of the whole ESG movement. That's my opinion. Thanks again for time, Mike. Great call. Thank you, Jessica, as always. Anybody else? Yeah, mutual funds versus ETFs, CJ. I mean, you can do some research on that on your own, of course. My opinion is I'd rather go into the ETF as long as it's not the leveraged ETFs, because there's other things going with that. Unless, I'm not saying leveraged ETFs are bad, but they're more shorter term. But for longer terms, yeah, I would rather look at the ETFs per se than the mutual funds. But look, Vanguard, and again, I don't work for Vanguard. I don't get $1 if you put anything into them, right? If you invested 10 million into a Vanguard fund, I wouldn't even get $1. But look, I'm a fan of them. I think they offer low fee alternatives to mutual funds. They also offer ETFs as well, right? I'm just an ETF guy, but my opinion does, you have to do what's best for you, right? Growth versus value, where should we be positioning in terms of parking our money? It depends on what your goals are, Taha, right? So value has woefully underperformed for whatever it is now, 13 years, whatever, I don't know, whatever. And it's starting to get a spark here. But the question is, does it continue, right? I think the reports of growth being dead are greatly over-exaggerated, right? Matter of fact, there's an upcoming webinar. There's a free webinar that's coming up next Tuesday, where we have our Silicon Valley insider, and she's going to be talking about a new group of tech kings that I mean, wow! I've read her. Of course I've done the research, and I've on her stuff, and she's great, right? She's all over the media. She's widely asked to come on and give commentary on what's going on. But yeah, I believe that. I don't believe that just, okay, FANG is dead, that's it, growth is dead. No, I believe that technology is going to continue to evolve, and it's going to continue to lead growth, and I think there's opportunity there. Does it mean that right now is the best time to park your money there? I don't know. Right? Timing the market is so difficult, and I try to do it. Right? That's what I try. That's why I use charts. I'm using charts to try to time the market, but it doesn't mean it's easy. Right? So how do you feel about dividend investing in the market? Her name is Beth Kindig from Technology Investor Network. She'll be doing a webinar next week. What's going on with wheat? Prices haven't gone up with the Ukraine situation. Well, I mean, wheat definitely went up, but it pulled back. It's now on the bounce again. If I look at wheat here, right, it's today it's up nearly 5%, but I mean it's still pretty elevated from where it was several months ago, right? So yeah, I mean it's not screaming, and a lot of people are talking about all the shortages and everything, but that could come out too, right? All of a sudden we could be overrun, and price could react to that. For those who want to watch the Apple event, thank you, Rosie. How do you feel about dividend investing in this market? Look, I'm a fan of dividend investing. It's one of the things I'm a fan of, right? I'm a fan of a lot of things. But if you want to look for some, depending on what you want to focus on, right? We have a couple of great writers on overall dividend. My favorite is Rita Mora from High Dividend Opportunities, but there are others as well. And of course, if you're looking for specific dividend investing vehicles like REITs, there's iREIT on Alpha, there's High Yield Landlord. So there's a lot of things that you can read about. But High Dividend Opportunities, if you're a member of Seeking Alpha, man, they post them. I think they post 27 articles a month, maybe more. But Rita and his staff are really, and his team are tremendous. Okay, anybody else? I'm going to call it a day. Thank you once again, Daniel, for all the help. Hold on, Varun. Let me look at it real quick, and this is going to be the last question. Sorry, folks. Can I have a symbol, please, for that? Can I have a symbol for it? Because VROM does not come up. I need a symbol for that. Going once. Going twice. VRM, okay. To me, it looks like it's gotten the living daylights beaten out of it. So I don't see anything on a technical side that tells me, oh, it's time to jump in. But again, right, your money, you can do whatever you want with it. If you have a different reason for owning the stock, just like, look, I'm down on Peloton. I'm not saying they're a bad company. I think the bikes are great. I just don't understand why the stock is. I do understand why the stock is acting this way. They can't make money, right? They didn't make money during the best time in stay-at-home retail history. How are they going to make money now where the gyms are opening back up and people just can't wait to go out, and weddings are seeing surges, right? So again, I'm not saying the company sucks. So I don't know. Maybe you love Peloton. Maybe you think it's the greatest stock ever. Maybe with this Vroom, you think it's the greatest company ever. Technically, though, I don't see any reason to buy it here from the chart. That doesn't mean it's not the greatest buy of all time, and it's going to 5,000 next week. I don't know, right? But on the chart side of things, no, doesn't look good. Oh, used car sales online. There we go. That's it. Will on LinkedIn asks about UNFI. Let me do a quick look on this. Yeah, again, I mean, this is United Natural Foods. It's more in a consolidate. It's consolidating all year. So I would wait till it tips its hand before I can make a better assessment of this one. By the way, if it sounds like I'm on the fence on a lot of things, go with your instincts, folks. That's what I do. Most of the time in the markets, you should be on the fence, waiting for the market or the stock or the commodity or the REIT or whatever you're looking at to tip its hand and confirm your information, right? Most of investing in the market is getting ready and then getting the confirmation that it's time to go in or to go out, right? Once you're in, you're always getting ready to exit. Anyway, that's it for me. Thank you so much. We'll see you next week, I hope. And I will try to be in a more cheery mood. I know today was a little glum, but I was just a little depressed after reading some things. So I apologize for that, but I will talk to everybody next week. And if you missed